Can you hear me? Can anyone hear me? I'm coming. Let me just set up some stuff so that we can go live. Right? Alright, it's done. Everything is done. Now let's get started. Let's get started, farms. Okay. Good morning, everyone. Good evening, good afternoon, anywhere you're in part of the world. Welcome to another exciting live session right here on KuCoin with me. I'm your host, Alan the Crypto Weeks, and today we will be diving deep into one of the most powerful bearish reversal patterns in candlestick trading, right? This way we are dealing on candlestick trading, and that is what we call the bearish HARAMI. That is what we call the bearish HARAMI candlestick pattern. Okay, the bearish HARAMI candlestick pattern. Yesterday we talked about what we mean by the HARAMI candlestick pattern, and we also talk about the two types of HARAMI candlestick pattern, which we literally did one-on-one trading with the first type of the HARAMI trading candlestick pattern, which is the bullish reversal candlestick pattern, right? So, well, today we'll be talking about the second type of the HARAMI candlestick pattern, which is the bearish HARAMI candlestick pattern, right? So, just stay with me. We're going to catch up a lot of things today in few minutes. I'm not going to keep you long. I'm going to go live trading so that you understand how this works in the crypto exchange, okay? So now, before we jump into other charts, if you are new here, hit that like button, subscribe, and make sure to check the links in the description to sign up and join our KuCoin campaigns for some amazing trading opportunities and reward. Okay, yeah, you earn while you learn, right? So there's no two ways behind it. You earn, I earn while you are learning. Okay, so if you are there with me, can you say I? Just type I in the comment section so that we can proceed. Wow, Estumana, she said I. That's great. That's nice. So I've already dropped it in my description section. Just make sure you tap on the description section of this live session. You will see two links. The first one is to sign up and start trading on KuCoin. The second one is the KuCoin campaign here for rewards and bonuses. Okay, if you are interested in streaming on KuCoin exchange, it's fine. You can click on the second link and join. So easy, right? So now let's move into a recap of our last class. Okay, you know what, do you know why one of my users yesterday came and told me, you love recapping about your previous class? Yes, I have to do it because most times if you are going to high school, your teacher has to refresh your memory about what we learned yesterday. Okay, so that's what I'm doing. This not just doing it for doing sake, but to refresh your memory, that if you are still active in trading, if you do go back and practice, do you do this or that? That is my aim. Okay, that's all I do. That is all I do, right? That is all I do. So let's get started. Now, I want to quickly recap of what we did yesterday, right? In our last class. So, I have to do this. So, before we dive into today's bearish HARAMI setup, let's talk about a quick review of the bullish HARAMI pattern and how it helps identify upward reversal. Okay, let me reply to this. So that is the link. If you are new to the channel, I've dropped it. Sign up because I'm gonna use KuCoin to explain this to you. So that is the link. All right, now let's continue. I said that the bullish Harami pattern, what it looks like, it looks like a small green candle inside a large red one, right? At the bottom of it, what? At the bottom of a downtrend, okay? And it signals a potential shift from a downtrend to an uptrend. And this position where it occurs tends to occur in a support zone, right? I explained that yesterday in our last class. Tends to occur in the support zone, right? And also examples from last week live trading chart, I did that, and also talk about the mistakes you beginners make when trading the platform. The mistakes you beginner do when trading the platform. Okay, so let me kindly go to the chat to briefly explain that to some people that were not online. To people that were not online. So let's go there. I'm coming. To people that were not online. Coming, just stay with me. Stay with me. So yesterday we were talking about the BTC, how the Harami pattern really matters. All right. Right. So this is it. I'm trying to check up the bearish Harami candlestick pattern that we did yesterday, and this is a typical example of a bearish Harami candlestick pattern. If you could see, if you could see here. I want to make sure you see it very well. For those guys that missed yesterday, you guys with me? So this is the example of a HARAMI, the bullish HARAMI candlestick pattern. You first of all see that this market was in a downtrend. This market was in a downtrend, right? This market was in a downtrend. You see, it was in a downtrend. Now, if you should observe, the market reached a resistance level at 111,975 per 1 BTC. This is what I'm trying to say. This was the support zone, right? This was the support zone. So this already tell you that the buyers the sellers are already taking the market because of this large bearish stick candle that is being formed here. Okay, because of this large bearish stick candle that is still formed here. Okay, so that is it. This is it. A large bearish stick candle that is still formed here. The market timed down to where? To 100,363 per 1 BTC, right? The market timed down to here. This candle, this rectangle that I drew here, right? So from here, this would have given you a motive that the buyers are going to take over the market. Now, at the bottom of this resistance support zone, we see that after the bullish HARAMI candle form, now guess what happened to the market? There was a change in pattern, right? Maybe it was not really massive, but at least you have eaten a little profit from here. The market spike from here. Are you seeing what I'm drawing? The market spiked from there, from 100,000 to. So if you have entered here, you would have know what it means, right? You would have understood how it should be profit. That would have been your winning zone. Have you seen it? You would have been earning a massive amount of profit while setting your stop loss below it. So that is just quickly an example of the bullish HARAMI candlestick pattern. Okay, if you have combined this with your MACD or RSI, I think you would have if you combine with the MACD, you see the market was going up. All of a sudden, the market came down. So that would have given you a small noticeable amount of profit. Okay, small noticeable amount of profit. So guys, let's delete all the lines. Let's go into our area of interest today, which is the bearish HARAMI candlestick pattern. Okay, now what do you understand? Deep upon deep. Now, what do you understand by the bearish HARAMI candlestick pattern? Now, the bearish HARAMI candlestick pattern is a 2-candle reversal pattern that appears at the top of the uptrend, right? One, the smallest candle, the baby candle, which you normally call, is being impregnated. It's being impregnated with a big one. Let me show you an example of that. My gallery. This is it. This is a picture of it. This is a picture of a bearish HARAMI candlestick. Excuse me. Pattern, right? The bearish HARAMI candlestick pattern. Now, guess what happened? When we have the bearish HARAMI candlestick, pattern, have you seen it? The market was in an uptrend. All of a sudden, we saw the baby candle. We might be a doji, but it's being impregnated. It opens and closes within the large bearish engulfing candle. Okay, have you seen it? This one, the baby candle might be any kind of color, but it must be small so that its open and close price are within inside this big candle, right? So I just want to show you how the image looks like, so that when we want to dive into our main course of today, it won't be, it won't really give us tough time. Okay, it won't really give us tough time, right? So let's go to the chart. Someone just message with that. Right? So let's go to ETH. Let's go to ETH. Right? This is ETH. Let's go to ETH. Let's go to ETH. If I want to see the bearish HARAMI candlestick pattern, remember it always come at the top of your uptrend. So whatsoever you do here, you make sure that everything is out the globe. All right. That's example, but not really example of it. At top of our uptrend. Stay with me. Using it. I'm looking for a bearish one. I'm still looking for it. All right, I got it. Now, this is already my resistance, right? That is my resistance. That is my resistance now. Now guess what happened? This is the bearish HARAMI candlestick pattern. The one in the purple section, that is the bearish HARAMI candlestick pattern. Now see what happened. I told you always occur at the top of the uptrend. See where the market was, 3,987, 3,080. Have you seen it? Have you seen it? Have you seen it? This is so marvelous, right? This is the bearish HARAMI candlestick pattern. Have you seen it? Now, after that, now see what it all means. See what happened to the market. The market pumped from 3,820 to 4,757, right? Now see what happened. See what happened to the market. The market tapped down. The market pumped. Have you seen it? So this is a massive profit. Okay, so now if I thought, let's go to the technical analysis aspect of it. That's the technical analysis of it. So the yellow line here would have been my entry, right? Then here the green line would have been my take profit. That would have been my take profit zone. Then my stop loss slightly above so this would have been a massive win for all of us. So guess what? Let me check the risk to reward ratio. That is 1. I want to show you the profit we would have made. That is 2. I'm showing you how to calculate the risk to reward ratio. That's 3. That's 4. That's 5. Risk is 1:5 ratio. My RR for this trade is 1:5 ratio. So this would have been a massive profit for all of us. That would have been a massive profit for all of us, 1:5. And you know what that means? Okay? You know what that means. So this would have been a nice trade for us if you would have stick to it. This would have been a massive profit for us. So now let's check another token to see how this pattern really works. Let's check another coin. Let's analyze this token. All this market with small candles. you want to trade this thing now, right now, okay, let's go to our time frame. You have seen the market was climbing up, okay. Market was climbing up. This is our support zone. That's my support zone, right? Have you seen? Have you seen? So you don't buy yet. You wait for a break of structure, right? This higher high, higher low, higher high, higher lows, higher high, higher lows. So once the market, if this market should break this line and there's a bullish engulfing candle that is formed between here, now we can set our take profit to be here and set our stop loss to be here. Our stop loss should be below this, while our take profit should be here, right? That should be where your candle should stop, okay. So there is going to be a big grain market that's going to happen here. Once the market crosses this line, once it break this trend line, once it break that trend line, you set up this, you're gonna have a massive profit with it. So we are gonna watch it, how it goes, right? Wanna watch how it goes. And what are the confirmation? The first one is a trend line. The second one is the formation of this pin bar. The formation of this pin bar that's about to take place. Remember, our token is 1000 CAT USDT, right? I've taken a screenshot of it. Just wait. Don't enter the trade market now because it can retest. Just wait for you to break this point, right? That is where you are going to buy. That's where you are going to buy. So you wait. This is gonna be your profit zone. Then well, this will be my stop loss. So if you wanna do risk to reward ratio, this should be 1:2. One is to 2 reward ratios. So it's definitely not too bad. It's definitely not too bad. You wait for that to take place, right? So while waiting, You see, the buyers are trying to push the market up, but let's see what the sellers got. Just wait. Alright, that is it. So let's check for the Harami candlestick pattern here. The bearish Harami candlestick pattern. This is it. First of all, know your resistance. After my resistance, you check. You delete it. You delete it. Have you seen it? Check what happened. Market time down. And it's the same thing that try repeat itself. History repeat itself. History repeat itself. You would have entered here, it doesn't make sense. So you wait for it to break. After breaking of structure at 0.05, the market pump to 0.08, and that is deliberately what is going to take place here. That is deliberately what is going to take place here. You wait for it to break this and you enter. But if it should retest and come back, then you wait for a break of structure or change of character. When this occur, you'll be able to explore it, okay, and enter your trade. So that is how useful this bearish Harami candlestick is. Very important. Let's keep session. I'm looking for the one at the top of the uptrend. I've seen it. Let's keep waiting. Let's check how it goes. Right. The bulls are trying their best to push the market up. Let's wait. You know, it normally takes time for all these candles to form. But if you check at the 5-minute time frame, isn't it? Something's gonna take place. Just wait. Just wait. This pattern works, and you know what, I love this pattern because it gives you a 8 ups before the market drops. That's why I love the bearish HARAMI candlestick pattern, right? It gives you a heads up. Oh, farm, get ready, pack your loads. The market is gonna go time down. And also, the time frame that this mostly works, and I love it very well, is always 1 hour time frame that is best set for the HARAMI setup, right? Okay. And while setting your trade, also endeavor to set your take profit to 2x or 3x, right? Your leverage shouldn't be more than 10x of your trading portfolio, no matter what happens, right? So if I want to buy, let's check out this trade now. Let's check out this trade now. Remember, I'm going to take profit at 0.06, right? That's how I'm going to take profit. I'm going to take profit at 0.06. Have to 1,000 cards. I'm going to take profit at 0.06. And enter the market way. I'll enter the market at 0.0475. 4755. So you're gonna buy 47. You set it at limit 0.4755. If you enter this trade with like $10 and 0.06, why is it not doing? I'm coming. Okay. And my stop loss, I'm gonna say my stop loss here 0.041, right? Set my stop loss to 0.041. Have you seen it? And if I should, and I say I'm going to enter this trade when the market is 0.4755, right? And if I'm entering this trade with $10, 0706 0.00, stop loss 0.041. Have you seen it? Have you seen how much I'm going to earn? 75% if it hit my take profit, and 44% if it hit my stop loss. Okay, so if you set it at current market price right now, if you enter here with $10, 0.0641. So that is just it. But I want to enter at market price. I want to leave it at limit. I want to leave it at limit. So that is how you set it. Okay, and as you can see, the market is thumping up. The market is thumping up. There's a lot of confirmation in this trade. A lot of confirmation. So I'm going to stop here for today so that the video won't be bulky or too long. Okay, so thank you deliberately for your time. It means a lot to me. Okay, we're gonna continue from there in our next class. Thank you very much for watching. Have a nice day. Bye guys.